Hi there, welcome to Kneppy Invest, and welcome to the last day of March. It didn't take me long till I realized that March didn't have 30 days, and there is one more day trading in this particular month. It only took me about 3 hours to realize that mistake. It's a Sunday, and do you know what Sunday means? Well, I am a creature of habit, and I've been doing technical update videos every Sunday for, well, I don't know how long, maybe a few years. And today is no different. There's a reason why it's called a creature of habit. You tend to do the same things over and over again. My own personal life, I definitely do the same things over and over again every single day. And it's just familiarity. I like doing it. It's easy to plan if you do that sort of thing, a creature of habit. And typically on a Saturday and Sunday, I prefer to record my videos in the morning so I can have free afternoons. During the week, I prefer to record my videos in the afternoon. That's just the way it is. So current time in Brisbane is 10:10 a.m. Daylight saving probably finishes next Saturday night or Sunday morning. I'm assuming that's true. I have no idea. And it's an absolutely beautiful day in Brisbane. Some nice fair weather queue outside after about 3 or 4 days of rain. I think we've had probably 100 to 200 millimeters here. I can see mushrooms growing on my neighbor's lawn. I have nice views here. And I was thinking of maybe mowing the lawn this afternoon, but I might wait just a few days so the lawn can dry out before I mow. I only mowed two weeks ago, but the grass is currently growing really quickly. And I'm not sure what mushroom tells us. I'm pretty sure mushroom tells us the lawn or the grass is waterlogged. I have no idea. I'm not an expert on mushrooms. I'm not a horticulturist, but I think there is some truth to that. And I'm not going to research that now. I might do it after this video, however. It's funny, since I've taken my leave, this wave of curiosity has overcome me, and I'm just Googling everything. And this is another thing I want to Google. I Googled neutron stars last night, starting to learn all about neutron stars, pulsars, that sort of thing. It's so fascinating. So I don't know why. I've always been a curious person, but this wave of curiosity, I wouldn't say it's overwhelming, but it's all my neighbors knowing. It's interesting. Anyway, today's video. Very similar than all my other technical update videos. We'll go through indices, commodities, bonds, crypto. Did I say that? Also have a look at currency. And last week I showed you all these trend killers. And what I'm now looking at is trend killers, but on the opposite side. So companies whose share price is in a downtrend and some good news comes out, and then share price just pops up. And a classic example of this is, I think it was called Dusk, which I do have a long history with. And I won't do this in today's video. I might leave it to next week's video. So what I'm looking for in all these charts is share price of a company in the downtrend. Then the company releases something really positive, and Dusk did this on the 18th of July 2024. And the share price rose 29.66% on that day. I still remember this and thinking, oh, maybe this is a buy, because it also broke a downtrend, long-term downtrend. And I was thinking that could be a buy, but I wasn't sure because it was only like a 2-month high, if that. And look what the share price has done since then. It has really rallied. It's also gone ex-dividend. So could have bought at about 76 cents and done fairly well. So I'm starting to look for these sort of setups where share price of a company is in downtrend. You see some good news released. And is this a really good buying opportunity? In the past, I would have said no, because it's not at a long-term high. It's only a very short-term high. But possibly I'm missing some opportunities. And this is one. So I'll do this in next week's video because I haven't found 10. I want to look for 10 occasions or 10 instances. So what I'll do instead in this video is I'll go through the state of all my trades, current trades. I think there's 22 of them, maybe 21. I've really pared back. I've taken some profits over the last month or 2 months. And there's a possibility if we see further weakness in the market, that might even go down to, say, 15. But still, quite a few companies still look fairly strong, even though we've seen overall weakness in the market. And that's a good thing. You want to see good strength, relative strength in any trades you're having or maintaining, and even upside. So some of these companies have reached long-term highs, and that's showing us they have relative strength. So I'll show you those charts. I'll go through those fairly quickly. Okay, so let's start our video today looking at the charts. X, J, O. It's really interesting because I am paying more attention to what the experts are thinking. And I'm getting a wide range of different thoughts. So we're getting some bulls and bears speaking their mind, which is great. Everyone can have an opinion. And the good thing about all these opinions is we just don't know who's going to be right. Anyone could be right. So there are some people who think this is just a nice, an ordinary correction in a long-term bull market. I'm not sure if I agree with that. We have seen a fair bit of weakness in the markets, in the indices, and we have seen a bounce the last 2 weeks. We have seen a nice little bounce. And to be honest with you, we expected this bounce. So it's played out as we expected. And the question is how much further this bounce has to go. Now, the problem is Friday was fairly weak on Wall Street. And more than likely, we're going to start April fairly weak on the ASX. But how weak is it going to be for the rest of the week? Maybe so it's only going to be a one-day down day. Don't forget, April 2nd is Liberation Day. And I have heard quite a few economists call it Lunacy Day because it's all about tariffs. And economists absolutely hate tariffs because of history. That's what history has shown us, that tariffs are not good, particularly broad tariffs are not good for anyone. They're not good for anyone. And I think one of the reasons why we are seeing a fair bit of weakness in the market is because of uncertainty. And in fact, I would say uncertainty is one of the most important things when it comes to the stock market, how investors are feeling. Not only investors, but also consumers. I think that's very important, uncertainty. Just think, you're a worker and you're pretty certain you're going to have your job for the next 5 years. You're more likely to spend and spend and spend. That's really good for the economy. But if you're a worker and you're not sure if you're going to have your job, you might lose your job because the economy is starting to look weak. You'll see all these other people getting fired. And if that is going through your mind, you're much less likely to spend. So there's a fair bit of uncertainty going out there among investors, among consumers. So this is particularly true in America. It may not be true here, and we're seeing less spending. And that is definitely causing consumer sentiment to drop. And consumer sentiment is really important when it comes to the economy. So interesting times in the United States. And the other thing I should also mention is Trump's support is waning significantly. This is something that is starting to become more and more significant over there. And I would say he's hating that. And if he continues to see his support wane, particularly among the, what do you call those voters who, swing voters, that's it. Particularly among swing voters, if he sees support continuing to wane, then who knows? He could change his policies. He could change his tact. I just don't know. And also those people who are saying that he's only using tariffs as a bargaining tool, I think that argument is becoming weaker and weaker. I do now starting to believe that he actually thinks that tariffs are a really good tool to use. I still think he's only using tariffs because that's the only tool he has, the only lever he has, because of what happened with Smoot-Hawley back in the 1930s. It went from something Congress decided on to something the president decided on, and I think that's going to change back. Anyway, so a lot of uncertainty in the market, and I think that's what has been driving the market down. If we do get a little bit more certainty, that would be good for the market, maybe. And the other thing is, who knows, we could go into recession. When I say we, I'm talking about USA. Anyway, back to the XGO. So I've gone on a little bit of a tangent there. We have seen the bounce. We have seen the bounce. And you can see the XGO has just moved towards the 25-day moving average. And now we might see further down. Well, we will definitely see further downside on Monday. I would expect the XGO to be down between 1% and 2%. I think there's a possibility maybe only down 0.5 to 0.75%. I think that's the best case scenario. Worst case scenario would probably be down about 1.5 to 2%. Anything worse than 2% would be unusual in my opinion, because the Dow Jones was only down 1.69%, Nasdaq down 2.61%, and I'm pretty sure gold had a pretty good day, so that could help us. Yeah, gold had a pretty good day. Yeah, 9 or not that bad. So I think mining might save us on Monday from a really, really bad day. But the most important thing here is, yeah, we've had the bounce, and what happens after now? No one knows. That's the whole thing. No one knows. And this is why risk management is really important, and is why I think technical analysis, it can really help you protect your capital. In my opinion, there are three main objectives as an investor, to grow your capital is the first objective. And I think that is the main objective for most investors. Protecting your capital is really important, particularly once your capital grows. And then eventually, it's all about income. And even when you're in the income phase, protecting and growing your capital can be important, because don't forget, inflation happens. So inflation can erode your capital. But I do understand that there are some people out there who probably would prefer to spend all their money that they have accrued over their lifetime. I'm pretty sure that's what my parents are trying to do. Spend, have a good time. And I say, go for it. I don't need any money from you. I don't need inheritance or anything like that. Spend as you've deserved what you want. Spend all your money if you really, really want to. And I think that is probably the mindset of quite a few retirees. And so protecting your capital is not quite important. Growing your capital, definitely not important. It's just about income. Okay, so I'm really going on tangents today. So not sure what's going to happen in the future for the XGO. A lot more uncertainty. Definitely not an uptrend. I'd say now there's more likelihood that we're going to see XGO continue in a downward trend, more downside to come. Now, again, it's all about what Trump does. I think what's happening now in the world, it's all about Trump. So in a way, he's probably feeling really important and really powerful because he's driving the market up and down like a yo-yo. Anyway, so the other thing, I'll just show you which I haven't had a look at lately, which is the moving average percent difference. And yeah, once it did get down to about -6, we saw the bounce. Now it's at -4. It doesn't mean anything, but I do think there is a potential that moving averages a lot of times do act as support and resistance. And there is a potential that the 25-day moving average will act as the first line of resistance for the XJO. It does look like it's happening. And I'll also say this. If the XJO falls below the last low, that would be a sign that it's moved into a downtrend, because we would have a new lower low. And that is a definition of a trend. Lower lows, lower highs for a downtrend, higher highs and higher lows for an uptrend. Okay, so that's the XGO. I'll also have a look at the weekly chart too. And yeah, we've had a couple of good weeks, up 1.82% and 0.64%. But if you do just have a look at the weekly chart, it has bounced off the 100-week moving average, by the way, but it's still more towards the top of the trading range. So I still think there is possible further downside to come. And where would I become interested? If we don't go into recession, where would I become interested? If the XGO falls towards 7,000, I'd say 7,100. That's when I've become really interested, because that would be near the bottom of the trading range. So that's still 10% down from where we are now, which would mean we're in a bear market, by the way. Anyway, so that's the weekly chart for the XGO. And by the way, yeah, 4 down weeks in a row and now 2 up weeks. So there you go. Now let's have a look at the XSO. We'll stay on the weekly chart. Yeah, nothing much. Now, I'm not the biggest fan of the XSO, I'll be honest with you, because I think I've mentioned this a few times. And you can see over time, it still has not reached its all-time high, which was back in 2007. And the reason I'm the biggest fan of the XSO is because the really best companies within the XSO will be thrown out. They will move up in the world. They'll become a bigger company and won't belong in the small caps anymore. And there'll also be companies that are not small caps right now that will decrease in value and will come into the small caps. So the best companies will get taken out, will leave the small caps, and the worst companies in the XGO, that sort of thing, will go back into the small caps. So not my biggest or favorite indice, because it doesn't really truly capture how you can perform if you just invest in small caps. Anyway, so let's have a look at the daily chart for small caps. And even this one does look like it's hit the 25-day moving average and is starting to sort of roll over. You can sort of start to see that pattern starting to roll over. And definitely we'll see that on Monday. We'll see further downside. Okay, let's have a look at some of the other indices. We'll have a look at the XTL, XTX, and XBK. So ASX 20 to start off with. And again, this is another one where the index has hit the 25-day moving average, and more than likely we'll see a bit further downside on a Monday. And another one, funny enough, this is an interesting one because if you go back through time during the uptrend, whenever the XTL just fell below the 100-day moving average, that was a time to buy. It happened 3 times. So that was a support level. And yeah, then that's been broken. We've had a moving average crossover, and possibly the 25-day moving average will act as resistance. Defense resistance, same thing. Yeah, so that's interesting. I didn't realize that. They're all showing signs of 25-day moving average possibly acting as resistance. What about tech? This is probably going to look really weak. I imagine we haven't seen much of a bounce in tech. Let's see if that is true. Oop, wrong one. Oh, in fact, the complete opposite. So this is by far looking the weakest. In fact, 2 really big down days. 1.63% down on Friday. Yeah, this is looking terrible, isn't it? In fact, we do have a new lower low. So we had a low a few weeks ago, a small weak rally, and then down she goes. So tech is looking really big in Australia right now. Definitely the weakest of the indices. And what about the banks? XPK. It's really interesting. I was watching a video yesterday. What's his name? Jason McIntosh. And when he looks at the banks, he looks at the XJL or something, XJL, which is a finance. But I prefer to look at the XBK because this is the ASX 200 banks. It's only the banks. It is all this index is banks in the ASX 200. So there's not many within this. There's only 7 companies within this. This is just a bank. So if I'm just looking at the banks, I prefer to look at this. Okay, so this is another case where we have seen a little bit of a rally. I did hear someone say, oh, the banking sector is looking fairly strong. I won't go that far. I don't think it's looking strong at all. This is just a bit of a bounce. In fact, right there, if you extend that little line there, so that was support, then it became resistance on the 7th of March, and the banking sector has just hit that resistance line on Friday, and I don't doubt we're going to see a bad day on Monday. Maybe not that bad. I don't know. Maybe there's going to be less selling in the financials, in the banking sector, but there is a chance that is a resistance level. It's also at the 25-day moving average. There you go. So definitely, I don't think it can be bullish right now when it comes to Aussie indices. I do think, and that Jason McIntosh also mentioned that he's very, he's risk off. He's very careful, which is exactly what I'm doing. Definitely not being aggressive buying. I did hear someone say on Wednesday that this is a really good time to buy. This was from a technical analysis person. This is a really perfect time to buy. I don't know if I would even think about being aggressive when it comes to buying. I have bought 2 positions in the last 2 weeks, but I've done mostly selling. Anyway, so Aussie indices not looking that strong at this point in time. Now on to the American indices, and we know that Friday was pretty weak, and it's probably because of tariffs. I don't know. Mostly because of the car tariffs, 25% tariffs. They probably thought, calling it Liberation Day, April the 2nd, everyone would be buying American companies, but the complete opposite. Everyone's selling. Anyway, so on to the Nasdaq. So Aussie tech looking pretty weak. I would assume Nasdaq is starting to look fairly weak as well. Oh, yes. Not as weak as the XTX, but it's almost getting to a new low. Let's see what I do like in TradingView. They do have these little things. Wall Street tumbles as fresh data fuels inflation fear. There you go. So this is about inflation fears. Well, yeah, tariffs cause inflation. I have heard some people say it's a one-off inflation hit, but that could have some further ramifications down the road. So if people are spending 10, 20% more on products, they're going to want a wage rise, which could lead to more inflation down the road. So I should have a look at this. So I thought it was just about, I suppose tariffs and inflation, they're linked. So what is Reuters saying? Let's have a look at Reuters. Let's see what it's saying. US core inflation firmer in February. US global wealth management cuts Lululemon share slide after bleak annual outlook. Well, yeah. Anyway. Anyway, by the way, I also like the American flag here. It tells us what sort of information is coming out. So we have core PCE price index, personal spending, and personal income month on month. Next week, we're going to have job openings and ISM manufacturing PMI, and forecast is 50.3. So I do like how TradingView does this information on the bottom there. But anyway, what can you say about the Nasdaq? It's definitely not in an uptrend now. And just like the Aussie indices, Nasdaq hit the 25-day moving average and bounced down. So the 25-day moving average is acting as resistance for a lot of these indices, possibly for Australia, but definitely for the American. Now, if we see further downside on the Nasdaq on Monday, Tuesday, we're going to see another lower low, and that would mean 6-month low, which, yeah, it's not moving in the right direction. And again, I think the reason of weaknesses in all these indices is just because of uncertainty. If you remember, when Trump got elected, the Americans loved it. So it jumped up 2.7% on Wednesday, the 6th of November, and a further 1.54% on the 7th of November. I think all the thinking there was deregulation is going to be really good for the American economy, for business, and now that has turned, and that's because of uncertainty. And a lot of companies just don't know how to plan because they just don't know. They just don't know. And a lot of companies over there will have to spend more because they have to bring in like parts to build their products. Even if they have manufacturing in America, they have to pay extra for parts to bring in from overseas. And the other crazy thing is not all parts are able to be produced in the United States. What did I read yesterday? That car manufacturing, the supply chain goes through 7 different countries. Oh, it was something crazy that if you just increase or put tariffs on all the parts, the significant increase in costs of cars in the United States. So, yeah, anyway. And this is what the market is concerned about right now. Okay, so Nasdaq looking pretty weak. That's the daily chart. Weekly chart. Now, to be honest with you, if you have a look at the weekly chart and just focus on the longer term, it's not looking that bad just yet. So I still think there is potential further downside in the future. By the way, you can see the COVID-19 dip here, and it's looking very small. And this is going to be true for this dip in the future. So 5 years down the road, this dip, not sure how long it's going to be, will look very small in the overall scheme of things. And if we go back and have a look at the tech crash, it's looking like a little anthill. In fact, the Nasdaq has significantly grown since then. It's gone up 5-fold, or no, 4-fold since then. And that's the great thing about the Nasdaq. It's got the best companies in the world. Maybe that's going to shift. Who knows? Okay, Dow Jones. We'll stay on the weekly chart. And again, it's sort of hovering right on a resistance level. So let's have a look at the daily chart. Yeah, there it is. There's a bit of it's sort of, it's oscillating above and below that level. And again, 25-day moving average is acting as resistance. Not as bad as the Nasdaq. So the previous low was a little bit lower than we are now, but definitely a little bit more weakness in the Dow Jones. So all these indices so far are showing downtrend signals. Yeah, downtrend signals. And the Dow Jones is true. I would expect the Russell 2000 to be the weakest. I'm pretty sure that's been true over the last few weeks. And, yeah, it's weaker, but there is an argument this is not as weak as the Nasdaq just because we haven't reached a new lower low, but definitely this is looking weak. I had been using this purple box as an important zone, and I don't think I need to use that anymore. I think we can get rid of that because it looks like the Russell 2000 is now in a downtrend. And just look at this. Look where it's look where the Russell 2000 hit. The 25-day moving average is now pulling back. Anyway, that's interesting. Now onto some international indices, and I'm thinking some of these are going to look okay, particularly the European indices. So I'm going to show you the Nikkei, Hang Seng, DAX, FTSE, and the Toronto TSX, which is the Canadian. I'm pretty sure it's Toronto Stock Exchange. Anyway, Nikkei, yeah, this could be the most boring index in the world right now. It's just doing nothing. It's been doing nothing for over a year, just going sideways, doing nothing. Nikkei, boring. And to be honest with you, when you do have a boring period, that means eventually it's going to break out, but it could break out above or below the trading range, and you just don't know which way it's going to go. And that's the Nikkei. Hang Seng has been looking the best of all the indices, and it's still looking pretty good based off the daily chart. So no complaints about this one. We have seen it pull back to the 25-day moving average. So really important next week, because if we see further downside, that would be not the best, but maybe the Hang Seng will bounce off this level and get to a new high. So by far the best looking index I think we might see. However, there is one more index that might be looking good, and that is the DAX. And even the FTSE might be looking good. But the DAX, it's still in an uptrend. Nothing much to see here, I'll be honest. Even though it's still in an uptrend, we have seen it go, it's going sideways and been going sideways for about a month and a half. So, yeah, this could be just a pause in the overall uptrend for the DAX. What about the FTSE? Maybe the FTSE is looking better. Not really. Yeah. It's interesting. These definitely not looking as weak as Australian and American indices, but yeah, I'm not that enthusiastic about the FTSE, and I think the TSX more than likely. I always think the TSX should mirror the ASX, or maybe it's the other way around, because we're fairly similar countries. Well, they're cold, we're hot, but they're primarily mining, and I would assume financials. We're primarily mining and financials. So fairly, and they love maple syrup, and we love maple syrup. They love ice hockey, and we know nothing about ice hockey. Anyway, so we're fairly similar countries, not companies, although maybe America will want to turn us both into companies. And the FTSE, yeah. It's not that bad, actually, the TSX. Not that bad, the TSX. I thought this was going to be worse. Not that bad. Okay, so that's all I've got for the indices around the world. Well, not around the world, because I've not included the Djiboutian index, which I have heard arguments that the Djiboutian index is by far the most important index in the world, because that country, I think in 15 years, Djibouti will be the most powerful country in the world. And I'm being sarcastic. I just want to visit Djibouti because of the name. Okay, on to gold and commodities. And what can we say about gold? I do have 2 gold companies, and I'm wishing that was more. I have been holding some gold companies off and on, and I do own West African Resources and Mika Metals, and I've always only wanted to own 2 gold companies, so at the most, and that is a gold producer and sort of like a small gold producer or a gold explorer that's close to production. And for me, that is Mika Metals right now. And that has been my mistake. Probably I should have been more bullish on gold, because this is an absolutely fabulous chart. There's nothing you can complain about right now. The only thing I could say is maybe it's due for a pullback, but all I'm saying is maybe. Maybe it's due for a pullback. So once you look at the daily chart and the weekly chart for gold, there's nothing to dislike. I'm just going to get rid of the MAPD. There's nothing to dislike. It's the weekly chart. What can you say? It's a beautiful chart. Silver. I noticed that gold was up the last trading day, but silver was down. So silver is the interesting one here. I did own one silver company for a while. I don't own any silver companies, and I think I should, based off this chart. So even though, that's the weekly chart. I was going to say, I thought silver was down. So the weekly chart looks pretty good. It wants to get above that level, $35. It is acting as a bit of resistance, but once I think it gets above $35, all bets are off. If we go to the daily chart, it tried. It is really trying. And it tried on Friday and has pulled back below. So it is really trying. I am going to imagine this will break above that level over the next few trading days. So silver looking pretty good. So for those who are gold bugs, or for those who like both, I'm trying to think what silver company. There's quite a few silver companies on the ASX. I'm thinking, is it ASL, Andean Silver? I reckon this looks pretty good. What's the other one? Silver Mines, SVL. Let's have a look. Is this one looking pretty good? This one's looking pretty good. ADT, Adriatic Metals. That's in Croatia, I think. That looks pretty good. If I go back to Silver Mines, I don't know much about this one. I actually quite like this one because we have just had a moving average crossover. Share price got to 11 cents, so it's just above 10 cents. I do like this chart for Silver Mines. I don't know anything about it though. Anyway, those are the 3 silver mine companies that come to mind. There's probably a lot more there, but anyway, that's the only ones that come to mind. Copper. Copper's been looking really good. Copper's been looking really good. I was wondering why copper was going on a run because if there are fears about the economy, this should be going the other way. But then I heard that there are possibly going to be copper tariffs or tariffs on copper tariffs. And that was the explanation I read. Yeah, BNP Paribas warns of copper price collapse as tariffs kick in. Well, that's the complete opposite. Trump's copper tariffs might be coming sooner than expect. Copper prices surged to record high amid tariff anxiety. So a lot of mixed signals there. Someone's saying copper prices might collapse if tariffs kick in, but some other people saying that tariffs are exploding because of tariffs. ASX copper stocks caught in Trump tariff turmoil as major broker turns bearish. Anyway, so the copper chart looks brilliant. I love this chart. It did break above this little resistance level, so that's looking like it's support now. But just all this mixed messaging, I don't know what to think about copper, but the copper chart looks pretty good right now. And of course, I showed you, I think last week, I showed you 3 companies you could trade. Sandfire, Ares Resources, Hillgrove, although Hillgrove has been looking weak. But anyway, copper, looking pretty good. But I just don't know. I don't know what's happening. Iron ore, boring. Nothing to see here with iron ore. That's a daily chart. We've seen 4 moving average crossovers since the start of December, and that is a sign that there's no trend. And I'd love someone to argue with me that there is a trend here on the daily chart. I love that because they might be seeing something different than I just don't see a trend right here on the daily chart. You might see a bit of downtrend signals in the weekly chart, maybe, but yeah, no trend at all in iron ore. It's just not happening at this point in time. Unlike uranium, which just keeps on dropping. We had a 2-day bounce, and that bounce didn't last very long. At least we haven't seen a new low, but iron ore just looks horrendous right now. And to be honest with you, I don't care if you have long-term bull or not uranium right now. It doesn't matter. It doesn't matter if you're long-term bull. Right now, there's a lot of weakness in uranium. And that is reflected in any uranium company on the ASX. They're all looking really weak. Paladin's the interesting one, though. This one has caught my eye just because of where the share price is in relation to a resistance level. No, support level, sorry. And that's that dashed line. It's right on it. That dash line has been in play, or that resist or support level has been in play since 2021. So yeah, anyway, so that's Paladin, plus a fair bit of weakness in the share price because of rain and seasonal rain in Namibia. But yeah, otherwise, this chart looking pretty weak. Oil below $70, that will probably have some Trump. Oh, it's bounced though for the last week or so. It's outside of my purple box, so I don't have any interest in oil. I would become interested in oil if it got to around $30 or $64, and that's about it. Or in that purple box, but I have no interest in oil. I do own one oil company, but I just think that's a value play. It's not because of oil; it's just value, and I'm just sick of that company, by the way. Gas has been looking good. Still looking good. I like this chart for natural gas. Lithium, no, I have no interest in lithium right now. However, if we start to see a bit of an uptrend in lithium, I think lithium is the go. but I don't know when it's going to be. It could be tomorrow, it could be next week, next month, next year, 5 years from now. I just don't know when it's going to be. So a lot of times I am a little bit too early to the party. Not literally. I don't go to parties. They're not my thing, but a little bit too early to a theme. That's probably the best way to say it. And this is mostly to do with commodities. So I was expecting a uranium bull run, and it came, but it came way after I thought it was going to happen. The last two lithium runs, I expected it, and it came way later than I thought it would happen. And so I was way too early to those parties, and I bought into uranium companies and lithium companies, and then I sold when it started to run, and I shouldn't have done that. So I've learned my lesson. Just wait till the commodity starts to run before you enter the fray. Oh, coal's the other one. I was really bullish on coal. Oh, this was many years ago, quite a few years ago, and I was way too early again, and then coal went on a massive run. I was like, yeah, way too early. So I'm learning my lesson. Don't be a little patient. Coal's looking crap. Yep, coal is looking crap. Tin's been looking really good and still looking good. It's broken out, looks like. And my favorite play in this space, and might be the only play, is Metals X. Let's have a look at Metals X. And this chart looks pretty good. I have been thinking about Metals X, but yeah, that's the play there. I'm trying to think of other tin companies. There's probably other tin companies. I just hate it when you raise a commodity to an expert like tin, and then they list off BHP and South 32 and Rio Tinto. And I'm thinking, no, all I want is pure play companies, or companies that are only mining to materials or commodities, not BHP, which is mining 5,000. Yeah, I just hate those. They just think of the biggest company and that's it. Give me something smaller, something more a pure play. Sort of like Fortescue and iron ore. That's what I want. Nickel, we did see a bit of a bounce there. I've also had moving average crossover with nickel. I don't have much interest in nickel just because of the history, China, Indonesia, and how I forget what they were doing. I read about it a few months ago and I've already forgotten about it. But whatever I did read, I lost interest in nickel. And I just thought there's some really, really strong headwinds for nickel in the future. Palladium, and nothing about palladium right now. And finally, cocoa. I really want to see cocoa drop below this dash line, 7,215. And the main reason is I want to see chocolate prices drop. However, I was thinking about this. Do you really think like Cadbury and Lindt and all the other chocolate manufacturers will lower the price of their products once cocoa falls? Of course they won't. Of course they won't. So that's why I bought Hershey. I should also buy Lindt and maybe Nestle. But I bought Hershey because share price of Hershey dropped a lot. And the reason I think it dropped a lot is because, I think there's two reasons Hershey dropped a lot. I'm not the biggest fan of Hershey chocolate, by the way. My dad grew up near the town of Hershey, maybe 1 hour drive away. In fact, I want to show you where my dad grew up. A little town called Milroy in PA. Shout out to Milroy in PA. So there it is, Milroy in the middle of Pennsylvania. Lots of Amish and Mennonites. And State College, for those who know anything about Pennsylvania or Penn State, that's not far away. That's State College. And Harrisburg, which is the capital of Pennsylvania, is about an hour drive. The bigger town in the area is called Lewistown. It's the county is called Mifflin County. My dad went to a school called Kisha Coquillas High School. And Hershey, I think, if I remember correctly, Hershey there's Gettysburg, for those who know anything about Civil War. If I remember, and like Lancaster's a big, huge, Amish community. For some reason, I thought Hershey was down here somewhere. There it is, Hershey. There it is, just to the east of Harrisburg. Hershey. Anyway, so I bought some Hershey because I thought, when cocoa prices drop, their margins will improve. And then I was thinking, so that was a bull case. And I was thinking with like Ozempic, people are going to be eating less chocolate, possibly moving forward. So that is a possibility as well. So that's the bear case. So anyway, Hershey, by the way, share price has dropped a fair bit and it's looking really good value. So I bought some shares. And yeah, so I'm happy with that. Long-term purchase. Is it a high-quality company just based off the... Yeah, I think it is. Just have a look at this long-term chart for Hershey. And if you put in the moving average, yeah, and the share price did drop below the 200-week moving average. And I think mostly that's because of cocoa prices. And I think also in Ozempic. Anyway, let's go back. This is not about Hershey. This is about technical analysis. And we're finished with commodities. So let's turn attention to Bitcoin and Ethereum. And this is the weekly chart. So let's go back to the daily chart. And they're starting to look weak. Both Bitcoin and Ethereum have moved into downward trends. And it's interesting because I think a lot of people assume that there would be a correlation between Bitcoin and gold. And I think we can rule that out. I think there's a way more correlation between Bitcoin, Ethereum or crypto and the stock market. I think gold's on its own. And there's been a lot of fears that Bitcoin is going to overtake gold as a preference, as a safe asset, that sort of thing. I think that's blown out of the water. I think it's a completely different asset. And there's way more correlation between Bitcoin, Ethereum, and the stock market than gold and the stock market. And to be honest with you, that means because there's a negative correlation between stock market and gold, maybe, that they're better diversify. You're better diversifying by buying gold versus Bitcoin. Does that make sense? Hopefully that makes sense. Anyway, so Bitcoin, Ethereum looking weak. Ethereum is definitely looking weaker. So yeah, but I think once the sentiment turns, trend turns, I do think Ethereum will be the better trade. Yeah, better trade if you're trading it. And by the way, Ethereum has dropped by more than half from its highs in December. Yeah, I just noticed that. So it got to 4,000 and now it's at 1,829. So it's dropped by 50%. Okay, now let's turn attention to bonds. This does tell us a lot about what the bond market is thinking. What's going to happen? Inflation, interest rates, what's going to happen? And I think the bond market even doesn't know what's going to happen. We saw bond market down 1.91%, which was an indication. So they're talking about inflation, but that's an indication that the bond market is not really concerned about inflation. So it could be the bond market is more concerned about the economy. And because they're concerned about the economy, they're thinking interest rates might drop to fight the bad economy. And that is my theory why the bond market has dropped on a Friday. So if they were concerned about inflation, the bond market would have rallied because that would mean higher interest rates. So interesting thoughts from the bond market. And what about the dollar? Aussie dollar just not doing anything. Disappointing, Aussie dollar. My main hope, because I am going to the United States in September, October, and start of November, and I've just been looking at accommodation because I'll be traveling. I won't be going to many cities, if any at all, but I want to stay at motels before I do these big hikes. And the main reason is I want to do some videos. I want to upload some videos, but I am thinking of maybe camping on the odd occasion. I don't mind camping. But I've been looking at all these motels, and the prices are insane. Insane prices, like $300 a night. It's like, yeah, I'm not going to pay that. And I've been reading about how 70% of Canadians have cancelled their United States trips for the next year. And this is going to significantly affect those northern United States states that rely on Canadians traveling to the United States. And I'm hoping that this is going to be a thing for the rest of the world as well. Cancelling all your trips to the United States, so all these prices of our motels go way down. That's what I'm hoping. Okay, so now what I'm going to do is go through a lot of my trades. Where are they at? So currently I have, let's have a look. I have 22 trades. And about 5 of these I've traded. My positions have been open for more than a year. Starting with XRF Scientific, I've held this for 2 to 3 years. Now my longest hold Gentrack was my previous longest hold. Then I took profits in that one. I'm very happy with that. XRF, beautifully trading company. And for this one, the 100-day moving average has acted as support over the past year perfectly. 1, 2, 3, 4, 5, 6. 6 times in the past. You could just trade this at your pleasure just by buying when it hits the 100-day moving average and then selling soon after. Anyway, share price rallied after they released results, I think it was results, up to $2.13 or 15 cents or something, has pulled back. So no reason to sell this just yet. So I'm not looking at selling this one, but I definitely will think about selling this one if it falls below about $1.70. If it does fall to that level, definitely the chart will be looking weaker. Next one is Stealth Group. I have thought about taking profits in this one, but not selling completely. I bought Stealth Group quite a few years ago at 15.5 cents. And so this one is sixfold. Is that sixfold? Yeah, maybe. No, not quite sixfold, fivefold. I'm doing a very quick maths. 15 times 5 is about 75. 50. No, is that 65? No, 75. Yeah, 15 times 5 is 75. Because, yeah, 75. So it's fivefold increase for me. This is actually one of my biggest holdings because it's increased so much. Share price keeps on increasing. And I first talked about Stealth Group back in September because the share price rallied. And I did belong to this investor group. And there was a lot of people who held shares in this company. And they were selling en masse on that rise in September. And I was like, why are you selling? And they were going, oh, it's overvalued now. And I was like, so what? Look at the chart. And the share price has more than doubled since then. But in saying that, I do think there's definitely more of a case that it's overvalued. But it always surprises me. And I was thinking maybe taking profits on this last big update on the 27th of March. I thought that was a great day to maybe take profits. And what I would do is probably sell half my holding. And the reason I would take profits is just because overall, this is becoming a big position in my portfolio. So that's Stealth Group, possibly taking profits, but it just reached an all-time high just not that long ago. Shape. This is another one I've held for over a year. And what can you say? This is another well-acting, beautifully acting uptrend. And it's just reached a new all-time high. The reason we saw a bit of a dip, share price rallied on results. And the reason we saw a dip was because the company went ex-dividend. And we saw this back in March last year. Share price dropped on the 29th of February by 12% because it went ex-dividend. And it didn't take long for the share price to go back up. And this always leads me to think, why do people automatically sell when it goes ex-dividend? Because in instances like this, share price rallies back up. Just wait. Just be patient. Anyway, so there's no reason to me even think about selling Shape Australia right now. I do have my sell price at about 282, which was the lows we saw back on the 4th of March. I think I just recently raised that to 280. Genesis Plus is another one where there's no reason for me even to think about selling this one. They released results, really good results. A lot of volatility when they release results, but share price recently was an all-time high. And I do have my sell price a little bit lower than probably what I'd be thinking of. Might raise that to like there. Now you're going to see, oh, whoops, I screwed that up. You're going to be seeing, I really screwed that up. You're going to be seeing that just because the share price falls to that orange line, so that's my stop loss, doesn't automatically mean I'm going to sell. And I do have a one, maybe even more than one instance where the share price has dropped to that level and then I didn't sell and the share price has rebounded. Superloop, another long-term hold. And when I say long-term hold, I'm talking about over a year. I bought this on a breakout back in February of 2024. And even though the share price has been going sideways for about 3 or 4 months, there's no weakness in the chart. There's no weakness here. I might just raise, just like I did with Genesis Plus, I might raise that to there, to about 198. And the reason is that we saw the share price hit that level and then bounce, try to get that level again and then bounce. So If I did see the share price fall below $2, that would be a slightly concerning sign and a possible sell for me. Take profits. Okay, 360. This is definitely close to a sell for me. Very close to a sell. This is another long-term hold. I've also added. This is an instance where I've added to my position. And this is definitely starting to look weak. We've had a moving average crossover. $21 is my sell price based off the lows we saw in January and also November. The company released a really good trading update, but the market didn't care. And the share price is sort of oscillating right on my sell level. And I think the share price will drop to about $20, at least $20 on Monday, might even fall below $20, and this could be a sell for me. So I might be taking profits with Life 360 either on Monday, maybe Tuesday or Wednesday. I probably should have sold this on Friday, to be honest with you, but it closed right on $21. Anyway, Ansell. So a lot of these companies I would not consider high quality. Some of these companies have the potential to be high quality in the future, but they're not there just yet. Ansell, I'm not sure if I would ever consider this high quality. It's sort of one of those companies that is on the precipice of becoming high quality, but is just below. And all I did with Ansell was buy on a breakout in April. So this is close to long-term hold. I bought this on the 9th of April. Would I take profits in this just now? No. I might just wait to the 10th of April if I wanted to sell because of tax implications. You can see when I bought in April of last year, share price did nothing for, is that 3-4 months? Did absolutely nothing, 3-4 months. And then share price broke out on the release of their August results. Yeah, beautiful results, 20th of August. And share price has rallied since then. Even their February results were pretty good. But you can see share price rallied on the release of results by 8%. And I think the market saw that as an opportunity to sell some shares. And the share price has pulled back. But still well above, maybe not well above, but it is above my sell price. And what I might do is just raise that to there, because if the share price falls below 33.14, that would be a new low. So not far from where it is now. So there's a chance that Ansell could be near a sell. Catapult, one I've been actively trading over the last 2 or 3 years. This should have been a longer term hold because I was trading this one and I sold at about $1.20, and then I bought back in $1.79. So don't be afraid to buy back in if you make a mistake. That was a mistake. And this is another, or had been a well-orderly uptrend. That might be coming to an end. I do have a sell price at $3.20, and this is another one where I can imagine share price falling below that, particularly if we see further weakness in the overall market. SKS Technologies, this is another one of my largest holds because I originally bought in at $1. There it is in July, but I've added to my position 2 times, which I haven't included here. So this is now one of my largest holdings. And this is another case where I think there is a chance the uptrend might be petering out. But their last results were really good. So I just think just a little bit of weakness, overall weakness in the market. Weakness in data center sector as well, even though I think work will continue in data center and that tailwinds behind this company will keep on going. This could be a sell for me. Soon, maybe, I don't know. Bravura, another one I've been trading off and on over the last probably 2 or 3 years. I first traded this way back. When was my first trade? It wasn't there. It would have been, it would have been back in August 2023. A beautiful, this is a trend killer. So I'm going to put this into my trend killer category. I'm going to put this into my next week's, where is it? Because this particular day, on the 25th of August 2023, looks like that was a trend killer. It was a downtrend before that, a really good day, and that's when I first started trading a Bravura. I think, no, it was before that. I got in just before that. And then I sold on that day, and then I was thinking, why did I sell? Because you can see what happened after that. And then I bought back in, and then I sold, and then I bought back in on this little breakout back in August last year. So we're talking about 6 months ago, and the share price has not quite doubled, but it's looking good. Really good results. Share price, when they released results in February, up 18.6%. But just like Ansell, we have seen selling coming in. And so 210 is my sell price for Bravura. So I could imagine Bravura getting close to that with the next few days. Judo Capital, this is an interesting one. So this is a case where the share price did drop below my sell price, and I went, yeah, the market's doing stupid things here. The reason it sold below, the share price dropped below that, is because there was a cross trade, a big cross trade. So someone wanted to sell some shares, and the cross trade was about $1.74, if I remember. And I might have mentioned it in the video that I think the market, in these sort of situations, the market overanalyzes what's happening, and you don't sell. You just wait for the share price to bounce. So the share price has bounced back up to $1.87. So this is an instance where I actually might sell because I do think there is a little bit of oomph coming out of this trade. But if I had to hold one bank right now, this would be it, by the way. This would be it because of the growth potential. And I've heard some experts say, well, no, it's the smallest of the banks. Why would you hold the smallest? Because it's growing. It's growing. Growth is important. And Judo Capital is growing. Okay, Temple & Webster. So a company I just don't understand how people are buying this company, but because it's what's the valuation? It's like a $2 billion market cap. Yeah, $2 billion market cap, fairly low profits, but people just like it. And so I bought on a breakout in August. It took time for it to rally above where I bought. Share price rallied on February results. Anyway, so I'm up about 33% in this particular trade, but I wouldn't be disinclined to sell this one just because valuation. But again, I've got to keep my bias out. I think this is so overvalued, but the market doesn't care about that. And the chart looks pretty good. Still looks pretty good. Solvar, yeah, this one is interesting. This one is still in an uptrend, but so much volatility. Share price rallied from like $1.25 up to $1.64, and then fell all the way back down to $1.24. In fact, the share price hit my sell price, which was $1.24, and then bounced off it. And even since then, a lot of volatility. Solvar, I think there is definitely an argument this is cheap, and that's one of the reasons why I'm holding it. And the share price is up from when I bought, so that's okay as well. QBE just reached a new long-term high. Pretty nice looking chart. This is another one where the chart looks pretty good. So no qualms holding this one. I am just beside myself that I own QBE or I'm trading QBE. I've looked at this company in the past and went, there's no way I'll ever own this one. And I think this is a perfect example of why keeping a bias out of your trading decisions is really helpful, because I was so biased against this one that I was just refused to buy a share in this one, even though the chart has been looking pretty good. And then I just bit the bullet and took a position in November. Share price rallied, and yeah, so it's still looking pretty good. And not only that, on Friday, the share price reached a long-term high. Oh, Developed Global, this is an interesting one. So I bought this one not on a breakout. I bought Developed Global because the share price hit a nice little support level below $2, and I thought there'll be a bounce. There was a bounce, in a really strong bounce. Share price went from $1.97 up to $2.50 fairly quickly. We're talking about 2 weeks or maybe 3 weeks. And I did not sell. And then the share price and I think the reason I sell is I took a closer look at a company and went, oh, there's a lot of potential upside for Developed Global. And the share price pulled back and I went, oh, then I've lost my chance to sell at a good profit. And I was willing to hold a little bit longer because I thought because I bought at $1.97 at a nice support level, it gave me more room to breathe, if that makes sense. It gave more room for this trade to breathe, not myself, for this trade to breathe. And I'm so glad I just kept my position, because right now the share price, or the chart looks really good. The chart looks really good. And I do have my sell point at 264. Now, because of what's happening with Bellevue, there's a little bit of weakness in the chart for this one. But overall, this could be a buy the dip situation. The chart for Developed Global looks really good. Oh, email payments. So this is one of my holdings where I am down. So bought $1 on this really good rally. There's a lot of weakness not long after that, 23rd of December. What happened 23rd? I forget. Was it they got a new CEO or something? I didn't understand why the market sold off on that. So that was not a trend killer in my opinion, because I thought this was an overreaction of the market. And yeah, the share price has recovered. And by the way, good results as well. I really want to see the share price get above $1.04, because that would be, right there, that would be a breakout for email payments. So this is the one of the trades where I am down. There's a few more, maybe one more, where I am down on my position. And a lot of the times I just want to be patient. Oh, Motorcycle Holdings. This one's interesting. I don't understand why this company is doing really well and why they're so bullish, but they are. So it looks like people really wanting to buy motorcycles. Don't know why, but they are. A nice little trend killer, a good trend killer on the 2nd of September. This is definitely a chart I'll show you next week. Share price rose on that day by 15.8%. And I bought on the next big rise, or just after that, on the 27th of November. So it would have been a trading update at the AGM, bought at $1.85. Bit of weakness. I didn't understand why the share price was pulling back in January. And then the results were really good, 27th of February, and the share price has rallied since then. This is another one where the share price has recently reached an all-time high. Maybe not an all-time high, a long-term high. Oh yeah, definitely not an all-time high, but a long-term high. So I'm willing to hold this one for a little bit longer. And by the way, I might even raise that to there. There we go. Oh, that's my price I bought. Mika Metals, I've mentioned this a few times. I bought on drilling results back in, was that early January at 9.4 cents. I was very confident, very confident. I'm very rarely very confident that this was going to break above 10 cents. I like the chart, and very rarely do I buy on that confidence because I'm very rarely highly confident. So this is the case where I thought the share price would get above 10 cents, so I bought at 9.4, and the share price hasn't been lower than 9.4 cents. Share price did get above 10 cents. It briefly went below 10 cents again in early February, and share price has now rallied to 15 cents. So very happy with this one, and this is one of my gold holdings. Nine Entertainment Group. This is another one where if I told my past self, 5 years ago, my past self, that I would hold QBE and Nine Entertainment Holdings, I would probably give myself a slap. But this is just a trading decision. I just went, I don't care that I might not like the company. I just saw a moving average crossover, and then I bought in just after that. And funny enough, after I bought, the share price actually dropped. I'm like, nah, of course it drops just after I bought in. And then share price rallied on the 11th of February, 14%. I can't remember why. Was that a takeover with Domain? Or was this takeover with Domain? 21st of February. Anyway, so share price has rallied twice. And since that last rally, share price has pulled back, but that's okay. Anyway, so I'm interested. This is another case where I would sell this like that. At a blink of an eye. Oh, Southern Cross Electrical Engineering. Another one I've been trading off and on over the last, say, 3 or 4 years. Or maybe not that long. And they released results on what day was that? They released results on the 19th of February. I liked it so much I bought on the day, which doesn't happen all that often. And I thought, okay, there's a bit of resistance at about $8.85 to $1.90. And I thought, it could blow up right above that resistance level. It tried to, but it failed. Share price has pulled back. And I think it's just overall weakness in the market. By the way, I reckon this company is probably looking really good value. Yeah, P/E ratio 14.53, dividend yield 4.81%. This could be fairly similar to another company I own called Bell Financial, which even though the chart doesn't look that good, I think it's just really good value. So this could be a case where even though I'm trading it, I might maintain my position just because there's value here. And I think there is potential further upside. And I think the market is just completely missing this company right now. Collins Food, my two most recent positions. Collins Food, this was a trend killer. Oh, this is a trend killer, a good trend killer. So this is another one where I'm going to have to add CKF to video technical. This is another share price in the downtrend. And then they released results, was it? 7th of February, share price popped up 12.7% on that day. And then after that, the 2 weeks after, share price just went sideways. And then it started to rally. And I went, yep, I'm going to buy. 8.52, share price up to 8.81. Share price broke above this little resistance area or zone in the last 3 trading days. it's looking good. And I think the reason why the share price rallied was there was a little bit of bullishness when it comes to people eating chicken, of all things, chicken. And maybe I've got it wrong. I thought KFC was cheap, but someone did mention in my comment section, chicken or KFC is not cheap. And anyway, and my last position, Pioneer Reddit. This is one I might get wrong. So there was an instance where there was a shareholder who had to sell because of pressures on their portfolio. That's why the share price plunged. And I thought they've completely sold out. So I thought the share price would bounce, but it hasn't bounced yet. So I don't understand why people are selling, because we don't know that the whole reason why the share price has dropped is because someone had to sell, which means there's no reason why the share price should have dropped. And the other thing they have done is they have released a 2-year guidance, and their expected profit in 2 years is something like $18 million. I think it's 18 million. It could be something different. And the company has a market cap of 68 million. So if they do reach their goals, this company is dirt cheap. And I thought this was a case, sort of like Developed Global, although there's no real, you probably could imagine there might be support level right about sort of there it is, there. I don't know, it's not a strong support level, but I think this is a case where you can see that massive volume coming through, and that's that share I'm selling. I think this is a case where the share price dropped, and I think portions of the market just don't realize or don't understand why the share price dropped. So we do see a little bit of selling continue, because all they're looking at is, oh, the share price dropped. I'm like, I got to sell this position. I got to sell. It's a dog stock. But I do think there is chances this could be really cheap. Okay, so those are all my holding positions and the state of all my holding or trading positions at this point in time. Very close to selling a few, but a few of the other charts looking pretty good. Much less buying than I'm selling right now, just because I'm being a little bit more wary because of the state of the market. And that could change on a dime. Then I could become more aggressive buying. The other thing I should also mention is the reason I have started selling is because I need to increase my cash levels, because I'm not sure how much I've got to increase my cash levels, because I am going to be building a house. Well, not personally. And during that building period, I will need a little bit of liquidity to pay the builders, that sort of thing. So I do need a little bit of cash. I'm going to get cash once my current house is settled. Some of that money will be going to buy the land, and the rest of the money is going to be building the house. I just don't know how much cash I need to cover all that. So the good thing is I won't have to go into debt. But if we see a significant crash in the market, if we see the market fall another 10 to 20%, I might take advantage of loans in my mortgage loan. Not mortgage loan, my margin loan, because I want to take advantage of taxes. Because you can claim your interest as a tax claim. So yeah, I might do that. I don't know yet. The other thing was asking my parents for the loan, and I don't know if I can take or claim interest on that loan. So I pay them 5%, which will be lower than any loans I could get otherwise. And that would be higher than what they're getting in term deposits. So they have most of their money in term deposits. That's their choice. Okay, that's all I've got for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.